Hi guys, Thomas here, your real estate resource in Toronto, and today I want to dive down into the stat for the month of May. So the number of transactions is around 12,000, which is way higher than last year, but remember, last May we were in the middle of the pandemic, so it's only normal that we have such an increase in activity. Now, when we look at the price, this is where the breaking news is. The price is around 1.1 million on average in the GTA. We're talking about a 28.4% increase versus last year. And remember, the average price increase for the past 20 years is around 7%. So really, you can see the activity and the price increase fueled by COVID and the low interest rate. If we look at the graph, this is what it will look like. So you can see here the recovery from the bottom. So this is where the confinement hit the market. And as the interest rate went down, affordability went up, and a lot of buyers reconsidered their real estate needs and dealt in real estate. And you can see the price going up accordingly. And this is where we are today. If we look now per segment, the average price for a detached in the GTA is around 1.4 million. The average price for semi-detached is around 1.064 million, which respectively is an increase by 37% and 22.6%. Versus last year, again, if we look at the townhouse, we're talking about an average price of 866,000, which is an increase by 26%. If we're looking at the condominium segment, we're looking at an average price in the GTA at 682,000, which is only 9% increase versus last year. So now it's interesting to see how this different segment did behave during the pandemic up to today. So if we look at this statistic here, you can see that the price of condo actually went down during the confinement as people reassess the need to be downtown, reassess the need for space, and a lot of them needed more space and sold the condo to move into detached or semi-detached. And as you can see, since August last year, the price of condo went down faster, and the price went down a little bit for detached and semi, but did increase way faster and way sooner than the price of condo. So versus last year, the price of detached is up 26% and condo only 2.6%. Now, if we look at today, we can see the price of houses increase month over month of only 2.3%, when the price of condo is increasing by 5.2%. So what we're seeing is that today's market, where we see the vaccine in the horizon, we see that the pandemic is slowly reaching its end. People are reconsidering the attractiveness of being downtown and being to a condo, and a lot of investors wants to be ahead of the curve and go back into the condo market now because they expect the condo market to get better in the future. And that's why we're seeing today the condo market increasing faster than detached and semi-detached. Now, this stat, I find it very interesting. So this is the number of of new listing. And as you can see, we had a very busy beginning of the year. From January to today, the number of new listing was way above the average for the previous year. So as you can see, 2018, 19, 20 were relatively close, except here when we had the first confinement. But this year, the market in March, April was way more active than the previous year on average. But now, today, we are seeing a number of active listings, but also of transaction that is more within the average of the past 3 years. So now in this graph, I want to look at the months of inventory. So the months of inventory, I think, is a very important data, if not the best, to measure the equilibrium between supply and demand. Basically, the months of inventory is active listing divided by the number of transactions. 2.5 is a balanced market, and anything below that is a seller market. So as you can see in May, we were at 2.5, which was a balanced market, but which was also the highest months of inventory for the past 12 months. The reason why is we were in the middle of the confinement. People were a little bit scared still at that time to buy and sell real estate. So not a lot was happening. You can see the number of sales, only 4,600 versus close to 12,000 today. As you can see, as people became more confident into the real estate market, the months of inventory went down. And historically, in the past 3 years, 1.5 to 1 months of inventory is within the norm. So as you can see here, the month shrunk from 2.5 to 1.03 today. And you can see the months of inventory since February, March, April, increasing slightly. So as I was saying, very busy February, March, April, but now the market is more stable. One of the reasons is that at that time, the interest rate went down, which kind of fueled the real estate market. But now some banks have increased their interest rate, so reducing the purchasing power of a buyer out there and kind of stabilizing the market this way. So you can see the months of inventory, which is still a seller market, but not as much as in March with 0.68 months of inventory here. The last slide I want to show you is kind of looking at the month of May versus 2019, 20 and so on. And obviously the data that everybody looks at is the average price. So as you can see versus last year, we're looking at 22.2% increase year to date. Versus 2020 versus 2019, we were only at 9%. And as you can see here, this was 2017 when we had a small bubble, and then the decrease after that, and then a slow recovery. But if you look today, the prices are very, very high, close to what it was in terms of price appreciation than 2017. Also, if you look at the number of active listings here, we are 12,253, which is more than last year, but pandemic, but also a little bit lower than 2019, 18, 17. So historically, the month of May has always been one of the, if not the most busiest months in terms of activity. But because there's been so much activity from the beginning of the year, now we're seeing still a lot of activity, but less than a normal year. So that's what I have for you today. I hope you find that useful. If you have any question, please let me know, and I'll see you on the next one. Take care, guys.